The most savvy investors, the ones that have the biggest accounts, that do the best, is they do the same stuff over and over again, and it's what they know and what they're good at. And that's what's really I love about self-directed IRAs is it's up to you. We give you all the options. We don't restrict you and say, it has to be on the menu. You're entrepreneurial, you're an investor. We let you invest in what you want.
Any IRA can be self-directed. You just have to go to a place that allows you to do it.
But I want to first make sure you understand what a self-directed IRA is if you just sprung onto this specific episode.
That doesn't count as one of the top 10.
That does not count as number one.
Okay.
So I want to make sure you understand. When we're talking about a self-directed IRA, we're talking about an IRA account. This could be a Roth, traditional, SEP, solo 401k, a retirement account, where you can invest in real estate, you can invest in private companies, in crypto, in small businesses, in startups. Your IRA does not have to buy a stock or mutual fund or an ETF. You can if you have a broker-dealer IRA, and that's what most people are familiar with, but you don't have to. If you're interested in these alternative assets like real estate and small business, you can invest your IRA into those types of companies. It takes what's called a self-directed IRA. We've got an entire podcast on this, tons of resources at our website, directedira.com, on how to do this. And this is where we want to hit the top 10 frequently asked questions. I think the number one question people have is, what can I invest in?
Ooh, this is getting fun. Okay, so let's go back and forth. I'll say one, you say one, you say one.
Okay.
We'll go fast.
You didn't want to answer that?
No, I can. But okay. I mean, I'm trying to keep, our listeners engaged here. Make it fun. Okay. Real estate.
That is the most popular.
Well, you're supposed to say another one really fast. You missed the whole point of this game.
Private funds.
Crypto.
Small business.
Lending. That was a little broad. I'll go with private lending.
Okay, private lending. Okay. Oil and gas.
Sports teams.
Cows.
Gold.
Jets.
Ooh.
Planes. I got a funny story on that one.
Wow. Wow, it's so funny that when we play this game, I feel like it's Passport. You lost. Well, hopefully some of you grab
Let's unpack some of these.
Yeah, let's unpack.
But when we drop those words, let's work backwards maybe.
Yeah.
So let's start with real estate.
Yeah, and it's fun. What we're trying to let you know here is you can almost think of anything.
And we want you to invest in what you know. Okay, we're going to get to question number 2 here. Okay, these are all the options, but what should I invest into? Let's come to that in a second here. So you have a lot of options here. The key rule as you're looking at this is these are investment assets. We're not talking about assets for personal use. And we're talking about real estate. This is investment real estate. This could be a rental property. This could be long-term, short-term rental. This could be lending on real estate. Okay, I could be lending to other real estate investors. Mark and I have both done these types of deals with our own IRAs. And those are very common types of strategies. This could be a fix and flip. This could be partnering into an LLC with other people, where your IRA is the cash partner and there's other work partners doing a real estate deal. Let's get to small business. This could be your IRA being the cash investor in a small business. This could be your IRA investing in a startup that's raising capital that could be the next big thing.
Yeah, it's sky's the limit. The only thing we would say is it has to be legal under the law. And obviously that would make sense.
You guys don't have any illegal options
for
me?
No. But other than you can't invest in things that are illegal under federal law or whatever.
Like just cannabis.
Yeah, not good. You cannot invest in life insurance with your retirement account. You can't buy collectibles because that wine collection turns into a bottle collection.
Classic joke.
Yeah. There are
collectibles you can buy actually. There's some exceptions like gold, silver, platinum, palladium with certain purity requirements. But like the stamp collection, the art, the wine collection, the comic book collection, no good.
Yeah, the stamp collection just ends up in the mail. And then third, you cannot invest in S corporation stock because S corporations are for individuals. But those are just some of the last restrictions to think about of what I cannot invest in. And I like that you said something in there that leads us to FAQ number 2 is what should I invest in?
Yeah.
So it's like, what can I and what should I?
Yeah.
And I love what you said was like, what you know.
Yeah, and I think that's the biggest takeaway is invest in what you know. Like if you're a real estate investor, why would you go invest in tech startups? You know what I mean? Like if you're a tech person and you're in that space, in that world, why would you invest in real estate? I mean, you can. I don't mind you crossing over and maybe you want to diversify your investments or other purposes like that. But from our experience, the most savvy investors, the ones that have the biggest accounts, that do the best, is they do the same stuff over and over again, and it's what they know and what they're good at.
And I think the misnomer, because in the 80s, I was a huge fan of the movie Wall Street. Michael Douglas, oh my gosh, it was the best. And we heard the term insider trading. And I think we've been programmed when you watch the news or invest that if you have inside knowledge, That's illegal. Like, you cannot invest in something where you have inside knowledge. Well, that is an SEC, Securities and Exchange Commission law to protect investors and people and companies with integrity. That if it's a public company, you can't invest if you have inside knowledge. But when it's a small company, a private company, it's a special little unique something going on in town. An overpass is going to be built on the freeway and this land is going to be worth more in 3 years. Or you're a doctor and you know that, oh my gosh, an invention of this sort of medical device would change the world. Or, any inside knowledge you have in your industry and you want to invest your retirement account in it, go for it. Invest in what you know. That's what you should invest in.
Yeah, and I think just like you can buy a bad stock or a great stock, you can buy a bad real estate deal, a startup, an oil and gas deal, any of the assets we said you could invest in, you can make bad decisions there. And so, but this is the risk return stuff that you get to decide, and you're taking control of your retirement account. You get the benefit of the upside. You also suffer if you make the bad decisions. But I think that's kind of the American way. And that's what's really I love about self-directed IRAs is it's up to you. Like, you get to decide. And we give you all the options. We don't restrict you and say, it has to be on the menu. It's got to be one of those stocks or ETFs on the menu. We're like, we don't care. You're entrepreneurial. You're an investor, which most of our clients, they're very entrepreneurial. We let you invest in what you want or the opportunities that present themselves to you. It might be a private fund that you hear about or friends are investing into, or you get access to those. That's very popular. You don't have to be a wizard or but you might have opportunities that fall your way where it makes sense to use your IRA to invest.
Is there a penalty or tax to move my IRA into a self-directed way?
The nice thing is there's no tax or penalty. Okay, when you're using a self-directed IRA, let's say you got a broker-dealer IRA, you're at TD Ameritrade. This is your Roth IRA or traditional IRA, it doesn't matter. Let's say it's traditional for the example. And you're buying stocks or ETFs, okay? And you're like, all right, I got a $300,000 account here, but there's this $100,000 investment I want to do, private fund, let's say. TD Ameritrade won't let you do it because it's not on the NASDAQ or the New York Stock Exchange. So how do I do it? Well, you transfer $100,000 to your new self-directed IRA at Directed IRA, no tax, no penalty. And now that $100,000 is at your self-directed IRA and can invest into that private fund, into that private investment that's not publicly traded. See, TD Ameritrade is just a broker-dealer and won't let you do it. We are a self-directed custodian, the best that's out there, and we'll let you invest in whatever is allowed by law, which includes a private fund. But it's like going from Charles Schwab to Fidelity. Okay, you're going from, in my example, TD Ameritrade to Directed IRA. We're an IRA custodian, all the same as TD Ameritrade. We just have a different set of options for you, so you can decide what you want to invest in.
I like it. Another way of that I'd say this is, just keep in mind when you self-direct, you're not taking money out of any type of retirement account. You're just changing who the custodian or the broker is that is holding your account. You're going to say, oh, you don't let me do that? I'm just going to move my money over here. And so whenever you self-direct, no matter where your money's at, it's not coming out. And anybody that tries to send you the money, or, oh, you want to do a 60-day rollover, oh, you want a distribution, they are not getting what you're doing. Stop. Get on the phone with one of our reps at Directed IRA, and they'll help walk you through the steps of what to tell the company that has your money. It could be an old employer. It could be something like that. So you got to be careful telling someone that has no clue what you're doing what to do yourself. So it's kind of the blind leading the blind. So the point is the money is never coming out. You're just moving the type of account. And any IRA can be self-directed, and you just have to go to a place that allows you to do it.
I love it. Number 4, what are the tax benefits to self-directing your IRA? When you're thinking about your self-directed IRA, okay, and you're thinking about your IRA, let's just talk about Facebook stock. Okay, let's say it's publicly traded. You bought $100,000 of Facebook stock, and it goes up to $150,000. You sell that, and you got $150,000 of cash back in your IRA. Well, you don't pay any tax on that, right? Whether it's a Roth IRA or traditional IRAs, you're making money in your retirement account. You don't pay tax on the gains or income. Well, let's say you're doing the same thing with real estate. You bought a property for $100,000 in your IRA. It goes up to $150,000. You sell it for $150,000. That whole $150,000 goes back into your IRA. No tax on the gains. Okay, this tax advantage nature of your retirement account works the same for private assets as it does for publicly traded assets. Now remember, your traditional account is growing tax deferred. So I'm not paying taxes, I'm making money. Nothing's hitting my 1040. My account's growing. I get to reinvest every penny, which is huge. when you're talking about your retirement account, which you're investing for 20, 30 years typically. And then in the Roth account, of course, it's tax-free. It's coming out totally tax-free at retirement. So that is essentially the benefit. All the investment growth I'm having in that account, I'm not paying tax. Let me just give you an example of this, because I was talking to a real estate investor who does a lot of private money lending with his IRA and outside of his IRA. I was just talking to him last week. He had a big group. I did a webinar for him. It was really good. He loves his retirement account because he's one of these numbers guys, former engineer, that gets into all the numbers. And he says, man, when I invest my personal money and I'm doing private money lending, he's like, I'm getting a 14, 15, 16% annual rate of return on my money. But when I'm doing that personally, I pay federal income tax. I'm in the highest tax bracket, 37%. I'm paying state income tax. His state's about 6 or 7%. He's like, I'm paying over 40%. That is eating in to my 15, 16% return. I'm really taking home 8 or 9.
Wow.
And then I'm reinvesting that money next year and I'm trying to grow it. Then he says, when I looked at my retirement account, as I've been private lending that, it is insane how big my retirement account is from the little amount of money I started with compared to the private money I was investing outside my retirement account, because every dollar I make in my retirement account gets to be reinvested into the next loan and the next loan and the next loan. And when you've done that for 10 years, it is insane, the rate of return and the bigger your retirement account's going to be. So just think of it that way, is that advantage you have of every dollar of profit gets to go into the next deal and the next investment could be exponential, because we're talking about your retirement account, not what you're going to take out in 2 or 3 years. We're talking about in 10, 20, 30 years.
Yeah, that tax deferral or tax-free methodology is the synergy with the ROI and that rate of return of the inside knowledge of self-directing. Love it.
Hey, I'm cutting in here because I want to make sure you know all the stuff I'm talking about on my YouTube channel, investing in alternative assets, whether it's real estate or private funds or private equity, oil and gas, crypto, saving on taxes, all these concepts I love and I talk about here. I want to let you know we do this at my company, Directed IRA. So get on over to directedira.com/call and book an appointment with one of our self-directed IRA specialists that'll help you understand how to take control of your retirement.
All right, now number 5, how much does this cost? Is it going to be a lot more expensive? Because I'm paying a financial advisor, maybe fees in my 401k. I don't know. It's hidden.
Yeah.
I don't know. If I self-direct, is it going to be the same cost, or what does it cost to do this?
Yeah, so our annual fee is $495, and then it's $50 when you buy or sell something. Okay, so that's our fee, and I think
That's to open an account.
Yeah,
so I'm just going to open up a retirement account. Well, I have $500,000. It's got to be more, right?
Same thing.
$495.
Yeah, $495. You got $1 million account, a $500,000 account, $100,000 account, $50,000 account. It's all the same annual fee.
So I set up my account, $495, but you're going to charge me 1 or 2% like my stockbroker, whenever.
Yeah, we don't charge based on that. So we're just an annual fee. We want to keep the fee simple, and affordable so that people can do it. Now, some people do say, well, man, it's not free. My account at TD Ameritrade is free. It's free when you buy what they sell. You know what I mean? It's kind of like,
And then not even then. I mean, they have their fees buried in there.
Yes, they have what's called payment for order flow. When you're buying or selling stock, they're actually getting paid, which is a little bit of spread from what the sell price is to what you actually buy it for. And they make a little bit of money when you sell to what the person's buying too. So you just don't see it because it's happening at the transaction level. So they're making money. And then your 401k, by the way, the average fee on a 401k in the US is 1.5%. You got a $100,000 account, you're actually paying $1,500. Okay, a lot of people, they just don't see it because you're getting nickeled and dimed on how that fee adds up. So ours is just totally transparent. We're not making money on your percent on this. There's no hidden fees. We're simply getting paid by you, and this can come from your IRA, or you can pay us by a credit card. So when you're opening an account for the first year, the annual account fee is $495. You got a $50 account processing fee to open it up, and then $50 to make your first investment. So your first year, you have $595 because you're going to buy something, right?
Yep.
And then it's going to $495 every year as you're holding the asset. And once you have 4 more assets, you get charged an extra $100 per asset. But most people, that's less than 10% of our clients have more than 4 assets. So your account's going to be the $495.
What I love about it is all of these little nickels and dimes that you had or hidden fees in a normal retirement account are gone. It's very transparent. You can pay for these fees out of your own pocket and just say, I want to let that money ride inside my retirement account. I don't want the fees coming out of there. You have that choice or that latitude.
Particularly if you got a Roth account. Most of our Roth clients are like, don't eat into my Roth account. I can only get so much in, or I've got to convert more dollars that I pay tax to.
Yeah.
So charge my card, please.
Yep.
No. And you can pay personally. It's not a prohibited transaction. It's one of the exemptions. You can personally pay your account fees.
And I love it because the more money you have self-directed, the less the fees really are as a percentage, because the fees are the same whether you have $100,000 or $500,000 or $1 million to go invest in what you know best. But I think the main takeaway here is it's actually costs less than Wall Street to self-direct on average, because it's going to be a flat fee every year, no matter what the dollar amount is, and you get to choose the amount of flow that you want. So I think it's exciting.
Is self-directing for me?
Oh.
Am I the right person to self-direct?
My son Dylan asked me this the other day, and we had a really good conversation.
Yeah, and I get that a lot, particularly from friends or family. They're like, what do you do? And I explain it to them, and they're like, should I do that? And I'm like, I don't know. And some friends and family I know well enough to be like, that's for you, that's not for you. Okay? And so we love pitching the concept. Take control of your retirement account, invest in what you know. We're not restricting you on what you can buy, but sometimes a Wall Street ETF might be good for you.
Yeah.
And let me go over a couple of scenarios. You don't want to be involved. You want to set it, forget it. You're going to let Wall Street, crush you on fees, and they're going to make most of the money. But you're like, you know what? Let me just get my money invested. Maybe it's the S&P 500 or some ETF or target date fund, whatever it may be. I get that. I'm not saying don't do that. I'm just saying if you want to go next level, the self-directed IRA is next level. If you're entrepreneurial, if you're a real estate investor, so you know real estate, why are you not investing your IRA in the stuff you already personally invest in? I guarantee you're out there finding real estate deals. You're going to find opportunities to invest your IRA. Why are you using your IRA or 401k to buy stock or a mutual fund where you're freaking guessing? Also, if you have opportunities that come along, sometimes you're not a good self-directed investor right now, but in 3 months, there might be a deal or opportunity that comes by that you're like, I want to invest in that private deal, or I want to invest in that small business, or I could participate in that real estate deal my friend's doing. They need 100K, they need 50K. And now you're in the game because an opportunity presents itself.
Yep. And I think there's another perspective here too, is that you may have the lifestyle or the connections where deals are coming, but you haven't got enough money in your retirement account yet. And so it's like, okay, I can't wait to do this. I got deals. And in the meantime, I'm going to start contributing right away, because you need to have kind of that initial mass, to inertia or whatever, to get critical mass. I'm not an engineer. Anyway, but I got to get enough to work with to really help this self-directed engine do its thing. And that's okay. Just know don't say, well, I don't have enough money. Well, let's get enough money. Get on a plan of attack where you're going to make your contribution for last year. It's still available to you this year, and start contributing, and then do the little ETF. Do some sort of no load fund or very low fee fund, S&P 500, something simple where you're getting 5, 7, 8, 10%, who knows? But all of a sudden in 2 years, all right, now you got a checkbook ready to go.
Yeah, and what I'll say too is most of our self-directed investors, they're doing more traditional investments and they're doing self-directing. They're not 100% self-directing. We have a lot that do, but most of our clients are doing some other traditional investments, even in their IRA, or maybe their spouse's IRA is still in the stock market or something. And so you might have a little bit of balance of that. Some of you might be all in on it because you have enough of that deal flow and enough of that opportunity. So everyone approaches this a little bit differently. But I think the key thing is at the end of the day, you want a self-directed IRA to buy a non-publicly traded asset, an alternative asset, real estate, crypto, small business, whatever it may be. As you're looking at those assets, just know that's a little more than putting in a ticker. You'll be a little more active, but now you can have private funds where it's very passive. So it's just a little bit different. So I hope that gives a little perspective as you're thinking about, is this for me?
So I almost want to count number 7 is, how do I get more educated on the topic? Because
how do I learn
because
more?
that was one of my 10 was, how do I learn more? You just freaking answered it.
We've got books on it. I got the Self-Directed IRA handbook. If you're the person that's like, I talked to my accountant about this or my advisor and they told me it's risky and it's complicated. Well, guys, we have all the answers. I wrote a book with over 100 citations that explains what a self-directed IRA is. Give it to your freaking accountant or advisor if they got a bunch of questions, because they're uninformed on this issue. So Mark's got a book, a chapter in his book on Tax and Legal Playbook on self-directing. on what your CPA isn't telling you. You got some content on it in there too. So, and we already gave all the other stuff. So just know, we know that there's a little bit of education you need. That's why we do this podcast. That's why we're always out doing webinars, why we're doing events, why we wrote books on this.
You mean they have to get involved? We ought to call this self-directing.
Yes.
There we go. Let's call it that. All right. Now, number 8, and I don't know how to couch this one because it is a big one, and we've got to, stay timely here. How do I get started?
Yeah.
And I know that's a little broad, but it's got to fall into one of our top 10. How would you frame it?
Well, and I think a lot of people initially think, well, I have an IRA at Charles Schwab, let's say. And I called them and I said I want to do a real estate deal, and they said I can't do it. We get that one a lot because they're like, all right, I heard about this and I have an IRA.
Yeah, I want to get started. How?
Yeah. All right, so here's the problem. If you called Fidelity to do a real estate deal with your IRA, Fidelity said you can't do it. And that's not because IRAs can't buy real estate. That's because Fidelity IRAs can't do it. So the critical point here is you need the self-directed IRA. Good news, 2 guys here that have a self-directed IRA company called Directed IRA that happens to be the best. Go to directira.com. We open up your account. You can transfer over that Fidelity IRA, or maybe it's an old employer 401k, maybe it's a new contribution, whatever it is. We have a prior podcast on funding and getting the money in the account. But then you get the money in the self-directed IRA. Now you can go do that deal. In the example here, the real estate deal, maybe use an IRA LLC structure for that real estate deal. See, there's little steps here, other podcast episode, chapters in our books, content we've got out there, not complicated. You just need to learn the steps. So that's how you get started. You got to open the account, and what I would just say is book a call with our team. Get to directedira.com. Right on the homepage, you can book a call with our team. They'll walk you through the process. They'll hold your hand. They've helped thousands of other self-directed IRA investors, and so we're here for you to help you get it done. It's not like you just got to submit a ticket on our website or we're trying to fintech it out. No, we're here to help you along the way.
Yeah, you're going to talk to a real human in Phoenix, Arizona that's going to help you, and you'll understand them and be able to get started immediately. Now, I just want to add a different spin to that too. How do I get started? Obviously, opening up the account and transferring over the dollar amount you want to put in there, and then you're off to the races, blah, blah, blah. But I'm just going to offer another perspective too, is how do I get started? Ask yourself that question. Am I a good candidate for this? We already brought that up. So, okay, I want to be engaged. I think I have some deal opportunities out there. I have some network that I think I see this. Okay, cool. I see some opportunities. Number 2, be thinking about the dollar amount. Okay, I'm going to deploy 50 grand. I'm going to deploy 100 grand. You could do more or less, whatever. But just say, okay, I've got an idea. I know how much I want to deploy. At that point, I say, open up the account, because you already know that you're going to take action. What I don't want is for you to say, I'm going to self-direct and open an account. Do you have any idea what you're going to do? No. Do you have a dollar amount in mind? No. Let's make those decisions at least generally, so that we know that, because we want to see you succeed with this. And when you succeed, everybody wins. Your family around you, your friends, you're going to be out there telling everybody, oh my gosh, this is incredible. I'm investing my money. So ask those couple questions. But once you have that, I think it's important to open the account, because now you've started the car. You're on the road. You back the car out of the driveway. Now it's like, where do I go? And then it's going to help motivate you to make that next decision. And all of a sudden, you're going to see that white car on the road. You're going to start seeing those opportunities in front of you, and you're going to be ready to pull the trigger. Because the last thing you want to do is be like, I'm going to do this, and I've got the money. Oh, there's my deal. Oh, okay. Well, I just missed it. It's going to take me a week or 2 to get everything, set up and transferred. That may be on the far end of the spectrum time-wise, but you want to give yourself some latitude. So get the account going, and just at the right time.
Yeah.
Okay, we got 2 more FAQs, number 9.
All right, let's go over 9. I think this is a common question. Are there any tax traps or tax pitfalls I should know about when self-directing my IRA? And I'll just hit the first little bit on this. There is a tax some people talk about called UBIT or UBTI, unrelated business income tax or unrelated business taxable income. Basically, the easiest way to think about this, and we got chapters in our books and webinars about this, but the easiest way to think about this is IRAs were created to receive investment income. When you get investment income in your IRA, capital gain income, rental income, royalty income from oil and gas or technology, you're selling an asset, there's a gain, right? That's all going into your IRA. You don't pay tax on that. Interest income is you're lending money. You're not paying tax on that. If your IRA is getting business income, not dividend from a C Corp, if it's getting business income from it owns a restaurant, or it's invested in a distribution company or a consulting business, right? It's the cash investor in that. That income coming through an LLC where no corporate tax was paid, is considered business income and subject to this UBIT or UBTI tax. So it's something you need to know about. Sometimes you can structure around it. There's a lot of tricks into that and how to get out of it. As a tax lawyer, you know, I make millions literally charging.
We have some
clients
things. We got some
strategies.
things, yeah.
So, but is an area, and I think a lot of accountants are like, oh, don't do that because of UBTI. Even yesterday, I was talking with a investment manager, you know, very smart, successful person. It's like, what about UBTI, and how does that work with it? And so I explained that little rule there, and what applies and when it doesn't. So, most of the investments we see that does not incur that tax, but you need to know about it.
Yeah, and I'll just, one example would be, you said it, but I'll just say it a different way, is your IRA or 401k buys the building that's going to rent to the restaurant. Wonderful, no UBIT. Your 401k or IRA buys the restaurant and going to rent from someone else. Now you're in an operational business, and the IRS has said you got to pay your fair share in tax to create a level playing field with the other restaurant owners. But you want to buy passive income and investment property, knock yourself out. We're good with that.
One other thing.
Yeah.
I'll keep it brief.
Okay.
Because it is a question people ask, which is UDFI.
Oh, yeah, that's right.
Okay, unrelated
the
debt
stepsister.
finance system. Yeah, this is the stepsister to UBTI. What this is, it's a tax when you use debt to leverage and buy more assets in your IRA. So if you got like a $100,000 IRA, let's say, and you want to buy a property for $300,000, you can actually get a loan from a bank called a non-recourse loan. Well, they'll lend you the $200K. Your IRA puts in $100, so now you bought a $300,000 asset. But the IRS is like, but that profit you make from that $200K there, that wasn't IRA contribution or dollars. That was debt, non-retirement account dollars. So they make you pay a tax on that called UDFI.
Just the proportion of debt. They're like, you can take all the profit on your IRA portion.
Yeah. And so a lot of people poo-poo on this and say, well, why would I do that? I don't want to do an IRA. Guys, that's great. I'm only paying tax on the debt, and generally it's capital gains when you sell it. That's typically when we see this, because you can take depreciation for rental income to offset that. It's only on the debt piece you pay the tax. And I was able to buy an asset 3 times the value that I could do over here with my stock account or my mutual fund. So I take that same $100,000 IRA, I can go buy $100,000 of stock or $100,000 of mutual funds. I can't leverage that to buy more stock. You can't get margin to trade stock in your IRA, but you can leverage to get more purchasing power to buy real estate. And the IRS only taxes the profits. It's only when you make money on the debt piece. So just know about that. Again, we got more content about how that works, and but that's the other sometimes issue that'll come up.
Number 10 is someone said it's prohibited to self-direct. What is prohibited? Because there's some prohibited rules out there, and you guys haven't brought that up. What's prohibited? What do I need to know about being prohibited?
Great question. So the nice thing is there's only 3 restrictions on assets you can't buy: life insurance, collectibles, and S corporation stock. Everything else your IRA can buy. So what is prohibited has to do not with what you're buying, it's who is your account transacting with. So if I'm using my IRA, there's something called a prohibited transaction. If my IRA transact with someone who's called a disqualified person, that causes this prohibited transaction. And the disqualified person is really the key issue. So who's the disqualified people? Well, you are first. Your spouse, your kids, your parents. For those of you in Utah, all your spouses, right?
Oh my gosh.
I'm going to use it every time I explain this.
Yeah, I know. Sister Wives, it's a great show.
It's just the the gift that keeps on giving. I grew up in Utah. Okay.
So you're allowed.
So
it's
I'm
like
allowed.
Dennis can do Dennis jokes.
Exactly.
And Seinfeld explained that.
Yeah. He's Jewish. He can give Jewish jokes. All right. Okay. So let's say your IRA, for example here, let's say you own real estate already personally. And you're like, man, I bought this property for $200,000 and now it's worth $500,000. If I sell it, I got to pay tax on the $300,000 gain. What if I sell that property for $200,000 to my IRA and then my IRA sells it for $500,000? I won't pay any tax. Yeah, the IRS thought of that. That's what this prohibited transaction is preventing. They knew you would manipulate this. We would tell you to manipulate this if this rule didn't exist, all right? So it's restricting you from transacting with yourself. So now, of course, if you find a real estate deal that's worth $500 and you can buy it for $300, go buy it with your IRA, but it can't be from you. It can't be from your spouse, your parent, your kids. So those are restricted parties. If your IRA transacts with them, buying or selling, or even let's say your IRA owns real estate and is leasing it to one of them, that could cause this prohibited transaction, which disqualifies your IRA.
Another way I like saying it is, what's prohibited? Transacting with your IRA.
Yeah.
Selling your IRA, buying from your IRA, leasing to a family member from your IRA, you leasing from something your IRA owns, just anything transacting. Now, with that said, you can invest with your IRA. There's a podcast, just a recent podcast we did on creating LLCs with your IRA. You can put your arm around your IRA and go, hey, let's go invest together. But you can't put your arm around your IRA and say, let's transact together. Like, I want to sell you something or you buy me something. No, we're going to put both of our money, family money, your spouse's IRA, your IRA, and pool it and go invest in something new and buy from a third party all day long. So the prohibited rule is fair. I believe in it. I don't want people screwing over the IRS. That causes me to pay more in taxes. But if I want to go out and invest with my IRA, I can. And so learn about that.
Thanks, everybody, for tuning in. Please make sure you're subscribed to the channel. Please make sure that you're subscribed to the podcast. Give it a thumbs up. Please share it with your friends and family. We'll be back next time. Until then, stay calm. Self-direct on.